You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Bitcoin, Ether, Solana, Doge, and more. Cryptocurrencies and digital assets are taking the financial world by storm. This exploding market provides everything a savvy trader needs: volatility, volume, and liquidity, provided you know how to find it. That's where we come in. Welcome to the Crypto Rundown. Each week, we'll break down the latest trading activity, trends, and developments throughout the world's leading crypto derivatives markets. If it's moving the crypto markets, then you'll find it on the Crypto Rundown. The Crypto Rundown is brought to you by Amber Data. If you're entering the digital asset class, you'll need access to granular on-chain and market data from multiple venues to power research, trading, risk management, and compliance. Amber Data delivers comprehensive data and insights into blockchain networks, crypto markets, and decentralized finance, empowering financial institutions to apply traditional finance methods to digital assets. Amber Data eliminates the infrastructure setup, integration challenges, and maintenance headaches to access digital asset data, reducing cost and time to market to enter the digital asset class. Learn more and download their digital asset data guide at www.amberdata.io. Now it's time to dive into the exploding world of crypto derivatives. It's time for the Crypto Rundown.
All right, everybody, that music means we are back once again for the Crypto Rundown, the program here on the Options Insider Radio Network, where we break down everything lighting it up outside of our traditional stomping grounds. Not your Teslas or your Apples or your VIX options. Nope, we're going to talk about your Bitcoin and your ETH. We're going to talk about the volume, the volatility, the skew, all sorts of fun, unusual activity, what's cooking out there in those markets, and get a little bit beyond as well. My name, of course, is Mark Longo from the optionsinsider.com, as well as from the network upon which so many of you are driving up our bandwidth bills these days. We don't mind. Keep it coming. If you like what you hear, make sure you subscribe to the full network. Then you could really drive up our bandwidth bills. Get all the shows, nearly a dozen shows coming at you. So if you're still kind of new to this options thing, and we get it, many of you are coming from the crypto world, these options things still a little bit new to you. Check out Options Bootcamp, Options Playbook Radio, 2 great shows on our network that will help you get up to speed with these crazy options things. And then, of course, if you want to get even above and beyond to get more content, you have specific questions maybe about crypto options, maybe about the options world in general, theoptionsinsider.com/pro, the place to go. You get access to an exclusive podcast feed with exclusive shows, including pro Q&A sessions where we've had a lot of guests that touch on the world of crypto derivatives, including just this past week, we had Tony Saliba in there. He runs a digital asset firm now, and he comes, of course, from a long-standing options tradition, so he bridges those two worlds very nicely. He tackled a lot, actually, of crypto derivatives questions in his pro Q&A session. So a lot of fun stuff going on over there. If you want to pick the brains, some of the best minds in the world of options and derivatives, and indeed crypto, only one place to go, theoptionsinsider.com/pro. As we go around the horn and see who's joining us on the old program today, I'm pleased to welcome back on, it's been a while, our old friend, Mr. Bill, a.k.a. Bill Ulivieri from Cenacle Capital Management. Mr. Bill, it's been a while. Last time you and I chatted was back in April, late April, April 24th, sir. How are you doing? How are things in the world of Cenacle, sir?
Things are great. I mean, we've had some really great conversations. A little low on the cryptocurrency side, to be honest with you, when it comes to client, prospects, inbound conversations and conversations with clients. But it's been mostly income related, yield driven, and U.S. dollar interest rate kind of conversation because, where the 2-year is and 10-year, it's been more of a talking conversation. But yeah, still really exciting place to be. And I'm really glad that to be here with you today, Mark.
We're really glad to have you as we keep on rolling right on into the Bitcoin breakdown.
It's time to explore the latest trending activity, trends, and developments across the world's leading crypto market. It's time for the Bitcoin Breakdown.
All right, everybody, welcome to the Bitcoin Breakdown, the portion of the show where we break down all the action in the world's leading digital asset. Yep, we're talking about the big dog, which is Bitcoin. And you know what? Looking a little bit bigger this week than it was on our last episode. At the end of our last show, we had Bitcoin at 25,211. Coming into the start of the show this week, 26,724. So up over 1,500 handles, 1,512 handles from this time last week. So a nice little pop. I know all the bulls out there will take it. Of course, we had a little bit wider range outside of that. In fact, we hit a lower low right after our show last week. It got down to a little bit below 25,000, 24,930. That was kind of our low for the week. And then the high came in pretty much today. So show days are the active days. I guess everyone's tuning into the crypto rundown, see what's cooking in the land of crypto, because we hit 27,414 this morning. So a little bit wider range out there, even if we're settling back a little bit below the 27,000 level right now. So a lot to unpack. As I said at the top of the show, Mr. Bill, we haven't talked to you in many months. So a lot going on. Catch us up, sir. Obviously a lot of up and down and sideways in crypto since we last chatted, and certainly in the big dog, which is Bitcoin. What's been catching your eye? What's been on your radar in the world of Bitcoin since last we chatted, sir?
Well, since last time we chatted, it seems to me as though the SEC has lost, I'm not sure if that's the exact term, but has lost, like every lawsuit, they're kind of losing the narrative against anti-crypto. It seems like it was such a big thing in 2021 through 2020, beginning part of 2023. But it just kind of feels as though cryptocurrency and Bitcoin is winning. And I'm really excited about that. And I know that Michael Saylor from MicroStrategies always said that Bitcoin, like there's no such thing as bad press. But it certainly seems to me that when you look at, GBTC, the Bitcoin, ETFs, how cryptocurrency is doing in general, it feels like we're winning. And I'm really encouraged with that.
But we like having you on the show, Mr. Bill. Always a ray of sunshine, always a note of optimism out there. But you're right, the SEC has been handed a few reversals of late on the crypto front. So intriguing out there. And a lot of people on this show for years have been saying, we wish we could just get some clarity from them as to what they're looking for rather than regulating by enforcement. All of a sudden a letter pops up here or there, and next thing you know, someone's being sued or investigated by the SEC. It's hardly the ideal way to go about it, but that's kind of the world we're all living in right now. Let's see how that's weighing on the markets as a result. And we talked last show, listeners, that there was a bit of a resurgence on the vol front after drifting to some of the lowest levels we've seen out there since we've been running this show. Again, some of that was seasonal. Of course, we were heading into the dog days of summer, not usually a banger period for volatility. And so we saw Bitcoin vol get into the 20s, the mid to high 20s for a while there, which is pretty low for an asset class that has been in triple digits in the past multiple times. So that's pretty anemic vol. Of course, last show we were talking about how that vol had finally come back to life. We were threatening a 40 on our last show, about 39.55 in terms of 30-day vol in Bitcoin. And that is still pretty much the case this week. It has come off a little bit, but only about 2.5 points. Right now, we're at about a 37 in that 30-day volatility. So still a far cry from our mid-20s level we were at not too long ago, but also not quite threatening triple digits out there either, listeners. If we go a little bit farther out the term structure, see what's cooking, let's say half a year out there, see what's going on from a vol perspective. And we've seen a little bit more juice out there. Again, longer term, you expect to see calmer, cooler, saner heads out there, and that is usually the case. Our last show, we were at a 46.60 on the 6-month vol. Coming into the start of the show today, 48.30. So up not quite 2 points, but pretty darn close out there. So vol a little bit frothier, a little bit juicier as we go farther out the curve with Bitcoin. Let's flip that script now. Let's go all the way to the near dated portion. You know, everyone's obsessed with all things zero DTE. They want to trade now. Gimme, gimme, gimme. So let's look at the skew right now and see how that's lining up on the weekly front. And the last couple of shows, the weekly options in Bitcoin, the very, very near dated contracts, were heavily biased in the negative direction for obvious reasons. Bitcoin was selling off. We were seeing a lot of downside concern and or interest. When that's the case, you're going to see a pretty pronounced premium to the puts, and that's pretty much what we saw. It was negative 7.5 last week, which meant the puts had a pretty strong premium over the calls last week. This week, that's pretty much all gone. We're not quite flat. We're about negative 0.8 right now. We have come back almost to flat. So right now, it seems like, at least in the near-dated options, we found a little bit of equilibrium on the Bitcoin front. Will that last? Who knows? But right now, at least, we're kind of treading water. Let's see if we go out a little bit farther. Let's go out a month and see what's lighting things up out there from a vol perspective. And on our last show, again, things were dire. Things were looking bleak. The vol was and the skew were heavily biased to the downside, almost a -4 on our last show, a -3.85. This week, it's swung pretty much all the other way and then some. We are almost at a +2 now, about a +1.8. So looking out a month, we're seeing a little bit more upside. And again, we have popped in Bitcoin, so not entirely surprising there. But for those of you out there looking for a little bit of sentiment in the options, that's what we're seeing. And again, if we go a little bit farther out, let's go out 6 months. Again, that's usually where we see a little bit more optimism, a little bit more interest to the upside. And that is the case once again this week. It was ever so slightly positive last week, about a 1.75 point premium. So not much, but a little bit there. This week, that has increased to about a 4.5 point premium. So near dated, we are still negative, but only ever so slightly. You go out a month, that switches to upside love, upside to the positive ever so slightly again. And you go out 6 months, you go out a little bit further, and now you're seeing even more positive bias out there. Mr. Bill, any surprises, any reaction to what I just broke down there, sir? Or is that pretty much what you expected from a vol and skew perspective, sir?
I tell you, Mark, everything I do in the last 3 years is through the lens of looking at the U.S. dollar, how the dollar movements affect all the asset classes. And I'm listening to your research that you've just provided. And my mind is wandering a little bit saying, well, what did the dollar do then? And because it used to be everything was viewed through the VIX. Then everything was, in the old days when we were on the trading floor, we would look at the market and watch soybeans and corn and all like the inflation complexes and crude oil. And then we went to the VIX products. And just lately I've been looking at the dollar. And what you're saying is really interesting because the dollar has, broken from its high that we saw roughly, last year. And I just seem to, again, my opinion now is drawn to the ebbs and flows of the U.S. dollar seems to be ebbing and flowing with the way the skew moves in Bitcoin because it's a risk on or risk off asset. And I'm going to do a little bit more research with that. But right now, that's where my mind is going. And I'm also just shocked to see the VIX chart. Like you look at this VIX chart of it being, trading at 14 now. Trading at 14, maybe it got down to the lowest 12.5-ish. We're still kind of in a sideways to downtrend channel. And like we're due for a 32 or 36 VIX. I mean, we just need that to stay like at the top of the two-way range. So I'm not surprised to see maybe skew pick up a little bit just in anticipation of what, we're going into the weak months of the year, right? From September until February, say. So we'll see. I think Bitcoin seems to be more and more correlated to everything that you and I were familiar with for the last 30 years.
Does seem to be the case. And I know for a long time your preferred vehicle, and certainly for a lot of your clients, has been the Grayscale Bitcoin Trust. We talked about that on the show many times, the issues some people have with, of course, that discount. Some people find it attractive. Others find it a little bit alarming that it is so steep out there. Of course, we saw some of that discount narrowing a bit since the last time we chatted, heading into some of the summer months. That seemed to narrow up a little bit. Catch us up. Are you still all in on all things Grayscale, and how are we looking from a discount perspective these days versus the last time we chatted, Mr. Bill?
Well, I'm still kind of all into the Grayscale products, to be honest with you, and our clients have a very, very, very small allocation to GBTC, and again, I look at it as if we're moving to a Bitcoin ETF, if we're moving toward a standardized, like a new asset class that will be universally adopted, and again, if we're moving to a security that kind of acts like a closed-end fund, which there are hundreds are trading at discounts to net asset value. Like, I'm still philosophically okay with this. And it seems as though, I'm not saying that Coinbase and Grayscale have joined forces, but it certainly seems to me as though Grayscale has made a very, very good case in all their arguments with, toward the SEC. And I still feel very confident that the gap will narrow. And it's a small trade we have for our clients. And I'm still okay with it, as my clients are.
There you go. Mr. Bill is okay with it there, listeners. Are you still into the Grayscale, or have you moved on to other products? Listeners, I'm curious. Hit us up. Let us know as we keep on rolling. Let's see what's open out there on the land of Deribit. And again, we are just coming out of the dog days of summer, and we're not seeing a heck of a lot of paper out there on the tape across the broad spectrum of products, which is probably why the OI on Deribit right now pretty much treading water. We have 206,000 calls open on Deribit. That's up about a whopping 6,000 since the last time we chatted, listeners. And the puts, we have 102,000, down slightly, down about 1,000. So we're still hanging out pretty much almost exactly 2-to-1 calls over puts out there. Not a heck of a lot of evolution on the Deribit front. As we keep on rolling, speaking of products, let's get out to a product we've talked about a lot of late and has been interesting to watch. This is, of course, BITO. I know for a lot of you, or maybe fewer of you now because the volume is down, but still for a lot of you out there, this is your preferred vehicle, especially when it comes to optionable direct tracking Bitcoin vehicles, because there really aren't many. A lot of people like to sling the options and the Maras and the Riots, and we talked about that on the show, and we have done polls on that before on the network, and those have won our polls in the past in terms of your preferred crypto optionable vehicle. But those, as you said before, those are not tracking Bitcoin. Those are kind of doing their own thing. So if you want the quote unquote one-to-one, then BITO is kind of the only game in town from an optionable product, at least the one that has any sort of liquidity. There are others, but when you talk about liquidity, not much going on. BITO right now getting a little bit of a lift. It was about 13 even on our show last week. This week about 1370 as we kicked off the show. So up about almost 3/4 of a point. Volume wise, it's kind of treading water. It was at about a 23,000 a day on our last show, and it's pretty much right there again this week. Maybe down slightly, down about 1,000. I think it was actually about 24,000 on our show last week. So 24,000 ADV last week, 23,000 this week. Not a huge change, down about 1,000 there. Doesn't seem like today's going to blow the doors off. Only about 15,000 contracts on the tape. Kind of a sleepy start to the week, listeners. Everyone's kind of hanging out, waiting for the Fed to come in and do their dance. So as a result, a lot of people keeping their powder dry. Weirdly enough, the vol in BITO, even though we had a little bit of a move out there, is literally unchanged from where it was this time last week. It was a 40.6 on our show last week and a 40.6 this week. So obviously a little bit frothier than what we're seeing out there on Deribit, but not enough to drive a ton of paper. Let's look at the products out there, see what's open. Remember, we had some SEP open on our show last week. Those have obviously gone the way of the dodo. So let's look at the top 5 positions out there in Bitcoin, or I should say in BITO right now. And in fact, if we expand it to a top 10, there's still no puts to be found, listeners. It's all calls all the time, which is kind of interesting, also emblematic of the way Bitcoin options tend to trade. Number 5 right now in BITO, listeners, we have 28,000 of the Jan 20 calls. So a little bit of upside lurking there. Number 4, 41,000 of the Jan 2025 25s. Those have been open for a while. Talked about them before as well. Number 3, 63,000 of the Jan 2025 35. So a lot of long-term upside there. Number 2, back to regular January, 68,000 of the Jan 65s. And the number 1 size position in BITO options right now, 81,000 of the Jan 2025 30 calls. You like those, listeners? That's a long way out. Jan 2025. A lot could happen in the crypto market. Can we get to 30 by then? Or is that a bit of a pipe dream? We've seen Bitcoin and BITO both move aggressively in the past. So nothing is above or beyond we're looking at here. But still interesting stuff out there. Mr. Bill, I know you and I have chatted before about all things BITO. And you said in the past it wasn't your favorite vehicle out there. You prefer the Grayscale. In fact, you just said it today. Mm-hmm. Understandably, I know for a lot of our listeners, it's kind of one of the few optionable games in town, which is why we focus on it. But I know you were taking another look at it. Has this come across your radar since last we chatted, sir?
No, Mark, I'm slow to move on some things, and this is one of them. I mean, listen, Bitcoin is okay. So year to date, since 12/31/2022, Bitcoin is up 60.88%. BITO is up 30.11%, and the Grayscale Bitcoin Investment Trust is up 132.33%. So again, we have these huge disparate moves, across these assets, and the discount to net asset value on the Grayscale product has narrowed. I mean, back in the beginning of this year, at the end of 2022, maybe in February 2023, the net asset discount to net asset value for GBTC was 46%. 46% discount to net asset value. Now it's about 19. So again, I'm happy to see this begin to converge, and I'm just kind of slow to adopt because I have the battle of being an asset manager. I mean, it's just not about asset classes. It's about the battle within. We knew that as a trader, right? The war was not with the guys in the trading pit. The war was within ourselves. And I can't, in good conscience, sell something at a 47% discount to net asset value. I can't do it. Won't do it. Okay. So I'm going to wait until, and I see the SEC. I mean, I see Grayscale. I see Coinbase winning. I see greater and greater adoption. This is just a trade for me, right? This is like anything else. If I could buy a home on my street for a 46% discount, I would do it. If I could buy a bond fund at a 46% discount to net asset value, I would do it. If I could buy the US dollar, if I could go to a flea market and buy US dollars for 46 cents instead of $1, I would do it. And you and I both would do that. There's not a doubt in my mind. And whether the S&P 500 is trading at a premium or a discount to, its value in the arbitrage, that's just what we do. And we don't sell below net asset value. We buy below net asset value. That's what arbitrageurs do. So fault me for that. It's Grayscale is the party that took me to the dance. I'm sticking with them until further notice. And when this premium goes to zero, and maybe, God willing, it goes to a 60% premium to net asset value, that's when I'll be selling. Okay, so that's my story, and I'm sticking to it.
I can't fault you for that one, right? Yeah, I'm with you. It's hard to let go of a product with that steep of a discount. So intriguing stuff. And you're right; they all do various levels of tracking in different ways. We have found with the BITO that they do pay a hefty dividend, so that when you factor that in, it does make the tracking kind of line up a lot more. So you got to be into the game to collect the dividend. That's how they get you, Mr. Bill, at the end of the day. And, that's how we keep on rolling with the show right on into the altcoin universe.
It's time to move beyond Bitcoin and find out what's moving the rest of the crypto marketplace. It's time to boldly venture into the altcoin universe.
All right, everybody, welcome to the altcoin universe out there. Of course, the portion of the show where we explore everything outside of the big dog, which is Bitcoin, except for right now when we break down the entire altcoin universe and we look at the top 10 from a market cap perspective. And right now it costs you a little bit over 8 billion, almost 8.1 billion to break into the top 10. So a little bit of an uptick. We've been hanging out around 6.9 or so for a while. So a little bit of an uptick out there in terms of market cap. That gets you to our number 10, which is Solana this week, listeners. So we've seen Tron, some of the other ones that were fighting their way. They've been kicked to the curb this week. Number 10, we've got Solana, almost 8.1 billion. Number 9, Toncoin, T-O-N. That's a newcomer here to our top 10 here. 8.2, almost 8.3 billion. Number 8, it's good old Doge, still hanging out, clinging firmly with a death grip to that number 8. Sometimes the number 7 spot. This week is number 8, 8.7 billion with a market cap. Number 7 is Cardano, 8.8 billion. Number 6, USD coin. Now we jump up, 26 billion. Number 5, XRP listeners, 26.6 billion. Number 4, it's BNB, 33.2 billion. Number 3, it's Tether, as always, 83 billion. Number 2, listeners, it's ETH. And number 1, the big dog, which is Bitcoin, back over $500 billion worth of market cap, 521 billion. To be precise out here. So it's always fascinating to watch the evolution out there on the bottom half of our top 10, and no different out there this week. Let's get out to the number 2, though, which in market cap, number 1 in a lot of your hearts. It is ETH. And again, following the same trajectory that we saw with Bitcoin this past week, it was 1561 on our show last week. This week, 1634, up about 73, almost 74 handles on the week. In terms of range, again, we saw the high earlier today, 1667 out there in ETH, and the low came pretty much right after our show last week, 1533. So a little bit wider range out there on the week, but intriguing stuff nonetheless. Mr. Bill, sir, when you're not slinging all that discounted grayscale Bitcoin, what's catching your eye out there in the world of ETH, sir?
In the world of ETH? Well, again, same thing. Risk on, risk off. It seems like Ethereum has lost a little bit of its luster. I'm not going to lie to you. Again, they were definitely first mover adoption with smart contracts and value that's locked up in smart contracts receiving interest and yield, I guess you could say. But I have to be honest with you, they were a little slow to do their rollout and their upgrade last year, and it just seems to me that a little bit of the magic dust has fallen off Ethereum for me personally, and there just seems to be so many really interesting other projects out there, and do I watch those? Yes. Do I have clients that personally hold Ethereum? Absolutely. Is it a major part of their portfolio holdings? It's probably number 2, right? Number 3, Bitcoin and Ethereum are the 2 top holdings, like in every single client or prospect that we talk to. But again, risk on, risk off. What does Ethereum have to do with the US dollar? And again, this is just my new lens. And nothing really exciting other than Ethereum seems to be kind of in the middle of its 10-week moving average, a little bit below like its Bollinger Bandish type of trade. So I expect to see a little lower trade before we go higher. But again, very, very interesting asset class to watch.
That it is, listeners. Let's break it down from a vol perspective to see what we're seeing out there. And it has been fascinating to watch ETH, which is normally structurally more volatile than Bitcoin, trade at a discount to Bitcoin for a while. And that remains the case right now. On our last show a week ago, ETH vol 33 3/4. Coming into the show today, retreating a little bit, 31.40 right now. So down a little over 2.3 points on the week. That's the 30-day vol. If we go out 6 months, listeners, we're seeing vol kind of treading water. It was a 41 on our show last week, 41 2/3 this week. So pretty much staying around that same level. Let's switch to the skew, see what the options are showing us from an interest and or intention or just bias perspective out there this week, listeners. And everyone likes near dated, so we'll start in the weekly skew. And again, last week, things were looking pretty dire. That skew, negative 7.6. The puts were leading the dance quite clearly. Come into this week, and we're pretty much back to flat. In fact, slightly positive right now, about a half a point in the positive direction, listeners. So again, from being very, very biased to the dark side, we are now kind of hanging out right around equilibrium, at least for the weekly options. If we go out 30 days, listeners, we have seen also a swing to the positive. It was negative 5.5 on our show last week. This week, almost a full point, about 0.95, so almost a full point in the positive direction. So a pretty decent swing there. And then we go out a little bit farther, listeners. We've got 6 months. We were still positive on the show last week. We're pretty close to flat. It was about a positive 0.75. So not even a full point of upside premium, listeners. This week, that has swung back to a positive 3.6. So again, the tail of the skew in ETH this week is swinging back to the upside. Will it hang out there? We shall see. But right now, the bias, the concern, the interest, all to the upside. Let's go out to a Deribit, see how many contracts are open out there, what's moving and shaking. And again, seeing a little bit more action on the OI front. On the ETH side, we have 2.43 million calls open on Deribit right now. Listeners, up about 270,000. So over 250,000 new contracts on the call side since our last show. And the puts, 815,000, up about 112,000. Since our show last week. Let's run through a few other altcoin that I always want to pick Mr. Bill's brain. He's always got a few altcoin in his back pocket. Right now, listeners, some of the other ones you folks are watching out there. Solana at a 1962 when we came into the show this week, almost exactly 2 points higher than where it was last week at a 1767 on our last show. So nice little pop for the Solana fans out there. XRP, 50 cents this week, 47.4 cents last week. So up not quite 3 cents this week. We're pretty darn close to it. Good old Doge, 6 cents last show, 6.2 cents this week. So that's how it's managing to cling to its number 8 spot out there. Litecoin, we've been talking for a while. Litecoin's getting beat up. Litecoin's getting beat up. This week, reversing that trend a little bit. 59 and a quarter last show, 66.04. This week, up nearly 7 handles, about 6.8 handles from where it was this time last week. Cardano, last week 24 cents, this week 25 cents. So popping a whole whopping penny, listeners. Polkadot 4.01 cents last week, 4.12 this week, up 11 cents. And everyone's favorite Shiba Inu, it was 0.00, a million O's 7.1 this week, 0.00 million O's 7.2, listeners. So our Shiba Lambo's coming, not quite this week, but looking a little bit better than it was this time last week. Mr. Bill, whenever you come on the show, you always come armed with some interesting and intriguing altcoin in your back pocket. What is lighting up your tape in the altcoin universe this week, sir?
Okay, what is lighting up my screen is a protocol, a smart contract platform called Thorchain. The symbol is RUNE, Ruin, Thorchain. It's trading $1.90 per token. All-time high is in the, I think in the 80s, high 70s perhaps. And then I'll have to double check that all-time chart. Maybe hold on. I think the all-time high was like $80 a token. Crazy. But anyhow, Thorchain is a decentralized exchange. It's an independent blockchain that seeks to facilitate these crypto asset swaps in like an independent network. So I find it interesting because, again, at the beginning of the show, we were talking about how you had said how the SEC seems to be losing or, had to suffer a few reversals with their, are cryptocurrencies considered securities, et cetera, that whole conversation. And I just find it interesting that that Thorchain is a decentralized exchange. They're trading like 100 million a day, maybe more, in decentralized transactions, contracts. And I just find it, again, really, really interesting that sometimes there's this chain. There's a, like when you're going A, we go toward B. If you're going left, I go right. If you're going up, I go down. And again, the conversation is still very heavy, right, with the SEC. But it's interesting to me that the decentralized exchange like Thor would be looking so interesting to me and seems to be popped out above its long-term bearish trend line. So I want to double check and triple check that all-time high with Ruin. But it just seems that that's kind of popped up, and the conversation toward decentralized exchanges coming up of all time in the cycle. I just find that really, really interesting. So that's all. That's just popped up.
Fascinating stuff, as always, Mr. Bill. You know what else is fascinating, listeners? It's your questions. Let's get to them now. A little bit of the old crypto questions.
You've got questions about crypto. Who doesn't? It's time to find out the answers to your crypto questions.
All right, everyone, welcome to the Crypto Questions segment. Mr. Bill, before we get into our questions this week, I want to get your thoughts on the results of our question of the week from last week because it touches on the crypto space. I was joking at the top of the show, but I really only half joking that everyone is obsessed with all things 0 day now, Mr. Bill. All these near-dated options are all the rage. The Journal writing a big piece about them last week saying how they're lottery tickets. It's all the rage in the options world. So we were talking about on the network last week, listeners saying, 0 DTE, very popular with index options traders, but what's next? What else is on the horizon? What other products or markets or complexes should list 0 day options next? And Bill, we gave him 4 choices. We said your single name stocks, so your Apples and your Teslas, or your commodity options, so pick your poison, energy, metals, whatever you want on the commodity side, or the crypto side, so your Bitcoins and your ETHs, or the volatility complex, Bill, so your VIXs, your VXXs, all that fun. And the results are now in, Bill. That poll has closed at the end of last week, and 43.2% of our audience chose the single name stock, so they want 0 day Apples and Teslas. Maybe not surprising. People like that stuff. Mm-hmm. Right behind it, 29.7%, Bill, chose the volatility space. So they would love to have a 0 day VIX. As challenging as that would be to pull off, they would love that. And then 18.9% for number 3, choosing the commodity option space. Now, within that, there are Bitcoin options listed at CME. So within that, that could maybe fall into that rubric of the commodity slash futures options. That came in third. And then bringing up the rear, Mr. Bill, only 8.1% for crypto. So kind of surprising, I guess, Mr. Bill, the crypto folks perhaps not as enamored with 0-day, or perhaps flip that around. Maybe the 0-day folks just not into crypto. They're all in on indexes and now single name equities, Mr. Bill. What do you say?
Oh, Mark, I don't know. You might be asking the wrong guy this question, because for me, a single day expiration for options is like, who benefits from that? I mean, that is like, how is that investing? I don't understand how that works. I mean, we went from quarterly expiration to monthly expirations to weekly, to now to 0-day expiration. I mean, it's like Fast and the Furious version 10. Like, the exchanges can't come up with anything more robust, more innovative, more anything than a 0-day to expiration. I mean, I honestly don't get it, and I'm not going to trade that. What if you were to graph the chart of gamma on something like that? I mean, it's a straight line. I mean, vertical line. I don't know. There's just no sense to this in my mind. And I don't mean to hate on the exchanges. I don't mean to hate on anybody. I'm not hating on any of this. I mean, if this is what investors really want, I can tell you, none of my clients have any interest in anything like this. I mean, for them, it's, 10-year bonds, preferred securities, more slow and steady rates of return and yield. Listen, and I was a market maker for 35 years, okay? I started as a market maker in 1982, and I left the floor in 2012, right? And so, Mark, I don't get it. Why we need 0 DTE? Not for me. No thanks. There's got to be something better than that.
Yeah, if you had told me years ago when I was still a market maker that at a time when most people tried to avoid expiration whenever possible, that the whole business would be shifting towards everyone getting as close to the expiration fire as possible, Mr. Bill, and there'd be retail doing it, and there would be millions upon millions of contracts, and it would be the hot new thing, and everyone would be racing to embrace it. I would have said you were crazy, but that is where we find ourselves these days, Mr. Bill. So yeah, it's certainly not an area of the space that is not without contention. A lot of people do think what you say. It's not. We only have jokingly refer to them on the network as gamma bombs, because that's pretty much what they are. It's hard to find, you're right, the investing use case in these. They are entirely speculative instruments. So yeah, it's interesting. It's not for everyone, clearly. I still really haven't dipped my toes fully into it, but we know a lot of our listening audience is into it. We know the exchanges see dollars there, so they're going to launch more products. At the end of the day, Bill, if it makes dollars, it makes sense for them. And so they're going to find any way they can to exploit this. So the question really is, what's next? Seems like our audience is firmly on the single name front and not so much on the crypto side, even though maybe from a movement perspective, I could certainly see some 0-day action in crypto. Let's get out to some more crypto-specific questions. Let's go out to Max. He's got an interesting one, Bill. He wants to know, quite simply, why has staking become so controversial with regulators? You and I, Mr. Bill, we haven't really talked much about staking on the show. Well, what are your thoughts? Are you a big fan of staking? I know you like a good bit of yield. Do you like staking and that whole process, or do you kind of wash your hands of that, Bill?
No, I like it. I like it philosophically. I like it technically. I mean, I think the whole thing really makes sense. And once again, this just goes back to the idea of if is cryptocurrency a security? If it's a security and you're receiving staking rewards or yield rewards, and you're receiving it in that native token, then you're receiving a security, right, in your account, and you have to pay tax on that. And is it considered? Is it tax preferred, like a dividend stream that's typically taxed at lower rates, or is it considered ordinary income because like nobody can classify it? I think the concept of staking in the very beginning was a ruse. I don't want to say Ponzi scheme, but perhaps it was a potentially unethical way of driving up the price of cryptocurrency, because if you staked it, you locked it up in the pool. And if you locked it up in a pool, that means that the float wasn't out there, and there were shares that were not really allowed to trade. But it just seems to me that And listen, staking was really popular back when interest rates, like when the Federal Reserve was in a zero interest rate environment, when short-term rates were almost zero. You could collect 4, 5, 6, 8, 10% in Ethereum or Bitcoin or other cryptocurrencies, paying 14% staking. Like, why wouldn't you do that when legitimate exchanges and legitimate securities were paying next to nothing? And I think we've gone through we've matured a little bit, and that is staking just for the sake of keeping things out of supply is kind of scammy in a way, right? But at the same time, it does provide. And again, if we're looking at yield, if we're looking at income, if we're looking to be investors, like it's okay to have short-term bond funds. It's okay to have preferred securities in your 401k. It's okay to have Russell 2000 small cap. Like, we can name the whole gamut of asset classes. And if you are adding a little digital asset to your portfolio, then adding Ethereum and staking it, and adding other cryptocurrencies and staking them, as long as it's a small portion of your net worth, I think it's a great idea, because one day, so I was premature on the crypto winter being over. All right, I'll own that one, Mark. So, but if we do see a regime change, if we see a regime change at the SEC, if we see a presidential movement toward a more favorable cryptocurrency and Bitcoin environment, which is only 18 months away, then perhaps these things will pick back up again. And I'm all for it. I think it's a great way. But again, right, Kavad Eptor, you could lose everything. There's no guarantee you'll get your money back out of the pool. There's no guarantee that your rewards will be worth anything. But my gosh, let me just say one last thing. Imagine depositing money at your local bank, your big bank, and receiving Japanese yen or euro dollars as rewards for your money that's being staked. I think that's kind of where we're going in the future. I don't think that feature's available right now because it's too expensive. But just imagine that the concept of staking, where I can deposit money in US dollars and receive another foreign currency as reward, Mexican pesos, like, I think that's really cool. And I think we're moving in that direction.
Well said, sir. Yeah, I think it's definitely that security part that you mentioned, the fact you're getting a yield stream out of it. That's what's got in the crosshairs of the regulators. But you're right, we could see some change up on the regulatory front, and that could all be a different conversation a year or two from now. Let's go out to, I guess, A-Chat. A-Chat wants to know, he's got the question everyone has, Bill. Do you think we'll see a spot Bitcoin ETF this year? You're just talking about the regulatory side. This is one of the issues where we saw a little bit of a pop because we saw, maybe there's some loosening of the kimono there in terms of the prospect. I mean, we have the ETFs now. We have, things like BITO that trade off the future. So we have the half steps, Bill. People want the full step. They want the full enchilada. What do you think? Think we're going to get it? He specifically says this year. Think we're going to get it this year?
I've said yes every year since 2017. So the answer is I don't think so. I think we're kind of going toward lame duckish in the markets and in the administration as we approach the election. No, I don't think we're going to get it this year, which probably means it's going to happen. So I have to fade my own belief system here, Mark. So no, it's almost October 1st. I think we're done for the year, right? It's time to go on Christmas vacation, and we'll come back in 2024.
Just got out of summer. We're already on Christmas vacation. I love
it. My furnace went line last night.
All right. So I'm sorry to throw cold water there, Mr. or Mrs. A-Chat, but Mr. Bill, the biggest crypto optimist I know, says probably not going to happen this year. I would have to. That's a pretty quick timeline to get this thing turned around. I'm with you. It'd be cool to have it. It would certainly drive a lot of action, a lot of interest, at least for right now. It doesn't seem like by this year. And then once you get into next year, as Bill pointed out, we're getting into election territory. So maybe not the time for big change, but who knows? Maybe Gensler wants to go out swinging. And so he approves it in the last minute. Who knows?
He'll probably end up working for a crypto company, to be honest with you.
That's what they all do, right? They just take off one hat and then they put on another very expensive hat and live to fight another day out there. Unfortunately, listeners, this show won't live to fight another day, at least for right now. But we'll be back again, of course, next week. In the meantime, of course, if you're subscribed to the full network, a whole array of content coming at you for you to enjoy. Of course, if you missed anything, we have 16 plus years worth of content on the network feed for you folks to mainline, including a lot of great educational content. If you are intrigued by these options things. And of course, if you want to check out shows like This Week in Futures Options, where we do touch on the listed crypto that goes up over there at CME, maybe like volatility, talk volatility a lot. Our Volatility Views show every Friday, also a fun one to check out. A lot of fun things on the network for you. And of course, Mr. Bill, if folks want to check out what's cooking in the land of Cenacle, including your tome, sir, where should they go? What should they do?
Well, in a perfect world, Mark, I would have all your listeners go to Amazon right now and do a search for the Essential Estate Professionals Toolkit for Recovering Cryptocurrency. And I'm going to shamelessly promote my book that I published at the beginning of this, in April of this year. And buy a copy, buy more than one copy, and give it to your CPA, give it to your estate planning attorney, give it to your loved ones, because the people that are listening, I'm sure that not all your cryptocurrency holdings are held at your local broker-dealer, but you may have a wallet, you may have an offline stick, you may have a Coinbase account, who knows? So buy the book, give it to your loved ones, give it to them for Christmas, and let me or help your family members recover your crypto in the event you become incapacitated. So that would be a huge favor I would ask your listeners. But otherwise, go to CenacleCapital.com, send me a message through our form handler, and we would love to have a conversation and, again, advise and have conversations on cryptocurrency, because this is the next new thing.
Next new thing indeed. Of course, check them out over there on Twitter as well, at Cenacle Capital, Cenacle Capital.com. Of course, check out his book over there on Amazon. To spell his last name, listeners, Ulivieri, Bill Ulivieri. Check it out over there on Amazon. That's going to do it for us on the network today. Back again with our usual array of content throughout the week, listeners, until we're back again next Monday. Another episode of the Crypto Rundown. Stay safe out there, everybody.
The Crypto Rundown is brought to you by Amber Data. If you're entering the digital asset class, you'll need access to granular on-chain and market data from multiple venues to power research, trading, risk management, and compliance. Amber Data delivers comprehensive data and insights into blockchain networks, crypto markets, and decentralized finance, empowering financial institutions to apply traditional finance methods to digital assets. Amber Data eliminates the infrastructure setup, integration challenges, and maintenance headaches to access digital asset data, reducing cost and time to market to enter the digital asset class. Learn more and download their digital asset data guide at www.amberdata.io. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.